We're up and running. Smart strategies for buyers agents. For those of you that don't know me, Ron Siegel. I've been doing lending for just a day or two. I helped the first family that I helped was in 1983. So some folks weren't even around then, but 1983 was when we started. When I started, hosted daily radio show on AM 1490 ABC News and Talk. Lead the lending team at Geneva Financial as a branch manager. We do a lot of other things as well. So we're doing private money loans. We're doing investment properties, commercial properties, and then we specialize in 1 to 4 unit, either for personal use or for business use for investment. So we're going to get rolling right away in here. And what are we going to talk about? So our agenda for today: what are top producing buyers agents? What are they doing? What are the factors before the offer, writing the offer, addendums, waiting for the clear to close? We're going to give you all kinds of different strategies to use throughout all of these different areas. We're going to talk about a lot of different things that maybe you're hearing about, maybe you're not hearing about. So what are the top producing buyers agents? Well, they're knowledgeable. Obviously, they've got to know their product. They've got to know what they're doing. They've got to have some experience. They're organized, right? They've got that idea of knowing what comes when, what part of the process. So we're going to talk about that in depth. They're following the process. Now, they don't have to necessarily be doing everything. If they've got great partners, they're going to do less and less, but they're attentive and they're proactive. So if you know that certain things are coming, that's the bottom line, is if you know what's going to happen in the future, it'll help you be proactive. So and we're going to talk about a number of different areas within the transaction that you need to really be paying attention to. And most of all, strategic, right? Have a plan of what you're going to do, when you're going to do it. If you don't have a plan for what you're going to do, basically what happens is you're leaving things to chance. And it's very hard to scale a business. So the top buyers agents are scaling, and they're able to scale because they're strategic in everything they do. They do the same thing over and over and over again. And the less you leave to one time this, one time that, then you end up making mistakes. So what do you need to be strategic is the question. So, or why do you need to be strategic? So it's prevent unpredictable and messy deals. So I've got a lot of agents that come on my radio show. And in fact, we had one this week, I think is 47 years a broker. And her comment, we've talked about this many times, that every transaction has surprises. The question is, have you seen them before and you know how to deal with them, right? You might need a septic issue, right? If you've seen it before, you know how to deal with it. If you've asked the question, do you know how long if it's like an FHA property, how long since the last transaction? You have to deal with flip issues. So by you can prevent problems simply by, we'll have to bring pens out for you next time, Perry. So everyone should have handouts also. I missed mentioning that. If you have the handout for those that are on the Zoom link, you should have a handout. And Josh, are you monitoring chat? Because I see there's a couple chats in there also, and I can't see them from here. But so you should have a handout. The handout will tell you, you should be able to get most of the information there, so you can listen and take notes right on the handout. So again, obviously, prevent unpredictable and messy deals. If you know that if you've done your homework on the property ahead of time, you're going to be able to know that, we need to deal with septic, or we need to deal with roof leaks, or we need to deal with whatever may come up. And the idea here is the strategic agent is doing a lot of this stuff in advance. Being strategic, you can also develop close relationships with the clients. Is it easier to find a new client or to do business with a referral? Referral, right? A lot easier. How are you getting those referral business? So one of the things that we're doing all the time is every transaction that we do, we're asking about referrals throughout the entire process, right? Every Tuesday, we're calling on every transaction and we finish our conversations. Who else do you know? Have you ever noticed that when you're doing a transaction, that many times I use the term contagious, right? So people that are buying a house, their peers are buying a house. People that are selling a house, their peers are selling, or their neighbors are selling. I know in the neighborhood that I used to live in, nobody sold their house for probably 10 or 15 years. One person sold a house, and then all of a sudden everybody was selling. So the bottom line there is, if you're developing relationships and you have a strategy for when and how you're asking for the referral, that's why the agents that we work with most of the time, that we have a good relationship with, they're actually getting referrals during the process from our team. So when we talk about doing a loan with somebody, our whole focus is that there's 80% close on time is actually 80% of what we call a successful transaction. The other 20% says close on time and send a referral back to the agent. That's how we get our grading of ourselves. So we're doing this very, very strategically, and every single time we're asking for that. We avoid preventable delays by being strategic, right? Preventable delays. I mean, if you know that there's a roof leak and you see that in an inspection, now we don't want the inspection report unless we have to have it, right? Because every document that's referenced in the contract, then the underwriters are going to want to look at it. But if there's an inspection and there's no reference to being anything needed in the contract, we don't care. But if the appraiser comes out there and says that there's roof repairs needed, or there's chipped paint or some of those things, well, we want to make sure that that's taken care of. If it's not taken care of, we want to make sure that that's going to cause a preventable delay. Assuming that a buyer sends something, right? So if you're the agent and there was a work was done on the property that was required in the appraisal, and you know what was done, the buyer knows what was done. We don't know what was done until somebody tells us, right? So we're asking, but if we don't get the receipt, don't assume that we have everything. This is my bottom line. So no lender is ever going to be upset by getting an addendum twice or getting a receipt twice. Everybody's going to be upset if we don't get it at all. So the bottom line there is, these are some things that you can just kind of forecast it's going to happen, or you can be strategic and try and prevent it from happening. Face fewer conditions on your client's loan approval. So the sooner that we're able to get involved with the client, the less conditions they're going to have down the road. And what do I mean by that? So we have a team of people that we actually work with, and as soon as they do their buyer consultation, they're sending those clients right over to our team to get pre-underwritten. Not only pre-approved, but pre-underwritten. It's more important for you as an agent to have the pre-underwrite. And the difference between those, a pre-underwrite is actually going to be better. You can actually do it the same as cash. And there's now a box on the purchase agreement that allows for that pre-underwrite. Josh, I think we've got another admittee. And again, I see four chats. I don't know if those are questions that they are coming up.
Yeah, no, I've got those handled. Those are just, yeah.
Just pipe in if there's anything that we need to talk about. That way I don't bother you. Again, face fewer conditions on your client's loan approval if we're getting involved with it early, right? And we're going to give you some coaching ideas here of messages to let your buyers know. We send out the do's and don'ts during the loan process. I actually had a husband and wife. They were both deputy sheriffs, and they went and got they had a 60-day escrow, and he was on the loan, he was on the purchase agreement, but his wife wasn't. And we don't know the reason why initially, that's just the way they wanted it. Fine, we went and did it. His ratios were very high. We have a $500 rule. If you're going to do anything financially that's $500 or more, give us a call ahead of time and let us know, in case it's going to affect your numbers. Well, this deputy went out and bought a motorhome and a Mercedes after they were in the middle of a contract and went on vacation. So the bottom line is, guess what happens? Guess what happens when somebody goes and buys a motorhome and a Mercedes and their ratios are already tight? They're out, right? They don't qualify any longer, right? And we don't find that out because it wasn't on the credit report, but they did it after we gave them their approval. They went on vacation. Our team goes to do and everybody does, every lender does what's called a pre-closing credit report. So we look to see, was there anything new, any new transactions, anything new that's going to affect their ability to pay the loan? Well, we see $1,800 in new expense money that wasn't accounted for, and they were already tight on their disclosures. So, we're scrambling because we're now at day 55. We've got them approved. We could have closed before, and we even suggested to them, we would rather close the minute we can close. We want to close, right? Because we can't forecast what's going to happen, right? I don't know what's going to happen tomorrow, right? Somebody can lose a job. Somebody can, there's just a million things that can happen that can affect the transaction. Well, the sooner we close, the better off we are. So we want to know about all these things as soon as we can. That way we can try and face fewer conditions. And our goal, if we get everything that we need and that we ask for, our goal is to always have 4 or less conditions when we submit a file. The nice part is our processor is a junior underwriter, so she can help on that. Easy ways to make an impact. So let's talk about that just a little bit. So we're going to develop a strategic buyer consultation is the first way. Most agents have a seller's consultation. Is that fair? Right? You've got something prepackaged that when you go out to try and get a listing, you do a listing presentation, you've got a package you're going to give people. Well, the concept here is do the same thing for the buyers. Right? We're seeing more and more where there's buyer agreements, right? Where the agents want to have an agreement. A lot of agents that I know don't really want to be tour guides. I mean, can you imagine me having Perry as my tour guide to go seeing houses and spending the whole day as a tour guide, and then I decide that I'm going to go buy from Gilbert, right? Perry's not going to be too happy, right? Well, why would I do that? Because no commitment, and I didn't find the value, right? If I find a lot of value from Perry, am I ever going to switch? No, because I don't know what I'm going to get from anybody else, right? So you want to have that strategic buyer consultation. When do you think a house is sold on the buyer side? Do you think it's sold before or after you see the property? The sale, you should be selling, you should close at the consultation, right? Because I'm going to be sitting down with you and I'm going to be going through everything that you want, right? You want 3 bedrooms, you want 2 bathrooms, you want a white picket fence, you want a pool. You're going to look at 3 different lists, right? You're going to look at the list of the must-haves, like to have, and the gravy, the fantasy. Well, Perry, if I show you everything if I bring you a property and it has everything on there that you want, everything that's on the must-have, the down payment fits and it fits your budget for your payment. Are you looking to buy right now? Right? I want to know that. So did I just close Perry? Right? So when we go and see that house that fits everything that he wanted, and it has all those things, and Perry's not writing an offer, what does that tell me? I didn't know exactly what it was that was going to get him to buying. Right? So I didn't do my job well enough at that buyer's consultation. That was where that issue came up. You can also be developing personal relationships with your clients. Get to know them. Understand what they do, where they do it, how they do it. Do they have kids? Do they have pets? Right? You're not going to go show Perry a home in a 55 community. I don't think you're 55, right? Right? So, maybe somebody like me doesn't want to be in a neighborhood that's got, you go out and it's, a lot of motorcycle riders, right? That might not be my neighborhood, right? Everybody's got their own thing. We want to develop that personal relationship, and we're doing that all starting right at that initial consultation part. You're going to want to manage your clients' expectations. You want to understand what they want, but you're going to manage the expectations. If you're I have a friend of mine that's very, very successful. His hours are from 8 to 7, Monday through Saturday. He says the Lord needed a day of rest, so does he. Right? So, but he tells everybody that going up front. So if somebody calls him on Sunday, they know that they're going to get his voicemail. And he doesn't deviate. I mean, I've done 2 loans for a dentist, both 7-figure purchases. And the dentist called me one time on a Sunday. He says, here's what we're working on. I know that the agent is not working today. We'll talk about it tomorrow. But it was a $3.5 million home purchase. Agent doesn't work on Sunday. Client knew it. Expectations were set. Right? You're in business. Now, again, are you going to be, if you're a tour guide, that's one thing. But if you're actually doing a real business, you've got a price, you've got a fee for your services, right? If you can't negotiate your own services, how can I expect you to negotiate mine as a buyer? Right? I mean, I've got again, another firm that I work with, and they in their buyer consultation, they say that their buyer's agent fee is 3.5%. And if they get 2.5% on the listing, then the buyers know that they're going to pay them an extra 1%. All done up front. It's all set that expectations. They tell them why they're worth it. They tell them what their value proposition is. And it's all done very, very strategically right from the very beginning. Make sure that everybody knows exactly what's going on. You've got to be very transparent throughout the entire process, right? You're not hiding anything. You're not doing anything undermined. I do have that on the slide. So another one, if you've got good news, deliver good news, but deliver bad news faster. Right? So you're going to deliver good news fast, bad news faster. It's not going to get better. If there's a problem that's going on, ideally what you want to do is have the solution before you make the phone call. But make the phone call so everybody knows what's going on. Again, I had a transaction where we were dealing with this, and it was the 30th of December. And we were the clients were getting some money through an inheritance. That's where their down payment was coming from, was through an inheritance. And we hadn't got the letter, hadn't got the inheritance letter. Finally, they get us the inheritance level on the 30th. We were supposed to close on the 31st. And it turns out that the letter was not satisfactory to underwriting. So my underwriter called me up as soon as she got the letter. And she says, Ron, I got some good news and I've got some bad news. Okay. Hit me, Lori. She says, the bad news is this letter is not what they told us, and it's not satisfactory for us to use those funds. The good news is if we wait until the 2nd of January, then I can get a bank statement from them for December. I can throw away the October statement, and I don't care what that letter said. Okay, so we had bad news, but we had the solution for it right from the very beginning. We understand all these things. The whole idea there is keeping people informed. Never underestimate the power of data. As you're going through the entire process, you're the expert. You need to understand what's going on in the entire process. You're doing a transaction. Hopefully, you're doing at least a transaction a month or every other month, right? Anybody have less than that as an expectation or desire? Consumers are doing one every 13 years. They have no clue what's changed in the marketplace. Now, say they're very active. Okay, so maybe they did 2 in 13 years. Right? They don't know what's going on in the marketplace. We need to be the ones that are bringing the education to them. In the absence of us giving them good information, they're going to go and get information that may not be quite as good. So we want to make sure that we're the ones bringing the data. I actually have some agents every quarter. In fact, tomorrow we come out with our new home buyer's guide. So as soon as they make an appointment with a buyer, they send them the home buyer's guide, co-branded. Why? Because those consumers are going to go out and look for things. They're going to be looking at something. So if we give them the data to look at, we kind of control what they're seeing and have a better indication as long as we're giving them good data. And obviously, we need to be keeping our finger on the pulse. We have agents that like the idea of, here's the contract, tell me when my check's ready. Cool. But we're still going to call and give them an update. They know that on Tuesdays, they're getting an update on the transaction. On every milestone, they're going to get an update on the transaction. And we tell them going in, this is what we do. You'll know that's what we're calling for on Tuesday. If you're busy, just let us go to voicemail and we'll make sure we update you anyway. The whole idea there is the more times, if you have to call us to get an update, then you're not out there doing your two main jobs. I suggest that real estate agents only have two jobs: prospect and convert. Right? Once you've converted, get the paperwork and the transaction over to a transaction coordinator so you can go out and prospect and convert. Most salespeople are not real good paper pushers. Some are, but most of them are not. So what we want to do is make sure we're using our highest and best time. Again, I talked about this a little bit. Close your buyer on writing an offer at the consultation. Again, if we have everything on your needs list and your payment fits and your cash to close fits, are you ready to write an offer? Oh no, I got to wait 6 months until I get a new job or till the kids are out of school. Okay, so the properties you're showing today probably are not going to be available in 6 months. You're going to spend as much time going out and showing properties today? Doesn't make much sense, right? So you want to make sure that you're getting all this information during the consultation. They might come up to you and say, well, we want to be able to shop. We want to look for what's going on. We want to look at what's in the market. Okay, well, let's talk about what you want, and I'll make sure and get you every property that fits your needs. I'm going to send you information on every property, but know that it's really not going to help for you to go and look at properties right now if you don't want to buy for 6 months. Now, we can go out a little bit if you want to, right? And they may not know. They might be trying to just push you off. But again, that goes back to the why. If you understand why somebody is doing something, that can be your arrow in the quiver. So we were just working with a veteran in San Diego, and we financed his primary residence, and he's got a loan on a second home or an investment property in Poway. And he's got a boatload of equity in the second home. And he said, well, I want to buy a house in Utah so I can be closer to my grandkids. Well, because we knew that, we were able to go, and his initial call to me was he wanted to get a home equity line of credit on on the second home. And I said, okay, do you understand a home equity line of credit? Well, yeah, it's a loan against the property. I said, yeah, but almost all of them are adjustable rate mortgages. They're generally 2 to 3% above prime rate. And the Federal Reserve says they're going to increase interest rates. What if we did it and I show him how to structure it? Well, he wasn't exactly sure. I said, well, this is how we can get you qualified to buy that house you want near your grandkids. That I thought was what our goal was. Oh yeah, it is. That's the goal. Okay, so we need to make an adjustment here because you don't qualify by using traditional financing. If we use a bank statement or a debt service conversion ratio or debt service coverage ratio loan, we can get you qualified. Okay, it's going to be 1.5 points above what your normal rates are, but it's going to be 1.5 points less than what that HELOC was going to be. How bad do you want to be near your grandkids? More importantly, how bad does your wife want to be near the grandkids? Right? And so we ended up going with a completely different program than what they expected, just because we had that initial consultation and knew why. Why were they looking for a loan? Especially in this day and age, no one's going and getting a loan. His primary residence is at 2.25%. He's never going to pay that off. And if he does, I keep telling him don't. Right? He's paying extra money on that loan. And I'm saying, why are you paying extra money on a 2.25% interest rate? And you've got a credit card that's 24%. Something doesn't make any sense to me. Sales contract. Whoops, did I miss a screen? Okay, sales contract timelines. Let's talk about that a little bit. So you've got a few different stages in this timeline. You're going to be out shopping. You're going to write the initial offer. You've got addendums. You're waiting for the clear to close, closing. All of those are different things that are going throughout the process. We need to make sure, again, we're being strategic in all of these things. Before you're writing an offer, are you underwritten? Are you approved? What's happening at that stage? We want to make sure that we're dealing with all of these things. So let's go through them one at a time. Whoops. We also want to make sure that you guys need to know the red flags, right? That's when we talked before about the idea of unforced errors, right? I'm a sports junkie. You hear a lot of times about unforced errors, that you didn't have to throw that pass. You could have taken the sack, or you could have thrown it out of bounds. Or Lou Holtz one time said that he told all of his quarterbacks when he was the head coach at Notre Dame, he said, number one, you're going to never, ever have 4 interceptions in a game. If you throw 3, I'm pulling you. So you don't have to worry about that. And the other part that he said that he told them was, he said, if you have a problem finding an open receiver, throw the ball to me, I'll be opened. Right? He was the head coach on the sideline. Basically, he was saying, throw it away, right? Live to play another down. We don't want unforced errors. So there are errors that come up in the realm of title, right? You want to make sure that you understand the title report. Don't put your clients in a position to be all excited about a property that can't be sold, right? What properties can't be sold? Well, if the title is in the name of a dead person, they can't sign the contract, right? I haven't seen any dead people sign contracts before. So make sure that you're if it's an estate sale. Now these are issues that come up in estate sales right now. If the property's got it in a trust, it'll say that it's a trust. You don't have to always depend only on the title person that the seller has. Now you may have to use that person for title, but you can be doing your own homework also. If you've got a relationship with a title person, they're going to give you the access to get property profiles. And if you've got further questions on them, you can ask them further questions as well. So if the property is if the reason that the property is available is because the person died, okay, is it probate or is it a trust sale? We need to understand that. Make sure all the errors are listed on the contract if it's going through probate. Who's the person of responsible party? You want to make sure in every way you can, or you're going to ask the listing agent, is the owner that's gone through probate or trust, are they a minor? Right? There's people that leave their properties to a minor, but minors can't sign the contract. So you might get your client all excited about a property that they can't buy. That's a big, big red flag. And we need to let our buyers know there's no secrets. So there are probably 3 or 4 different services that are never ever talked about that the underwriters are checking on properties. Title looks at one to see, are they on the on a terror watch list. I had a property where the sellers, it was a common name, so they were on the terror watch list. We had to make sure that they were it was not that exact person. So you want to make sure that you're using your resources for those different things. There's also the Fraud Guard, there's LexisNexis. So there's no secrets out there. So they're not going to find, don't think that they're going to go through that. Okay. Manufactured homes, there's some specifics on manufactured homes if you sell in that market. So, whoops, I missed some of these here. I didn't go through, put them all on the slides. But again, seller can't be a dead person. Dead person cannot sign a sales contract. Make sure the estate has gone through probate. Make sure all heirs are listed on the contract and all heirs sign the contract. You must have a power of attorney for each heir or have the executor sign that has signing authority to sell the house for all heirs. And again, we've got that red alert, no minors. The next one that comes up, manufactured homes. If you're dealing in the world of manufactured homes, be very careful as to when the manufactured home was built. If it's before June 15th, 1978, I don't know of any of the traditional loans that'll cover that. We can do loans from after June 15th, 1978. The only loan I believe that will accept a home that's been moved is the VA loan. So if that home has been picked up and moved, it's not going to be financeable. Again, I think it's the VA loan is the only one that'll allow it. And even with that, you have to make sure that the lenders don't have overlays. What are overlays? So Fannie, Freddie, VA, USDA, FHA, they all have guidelines of what they'll accept. Lenders can then say, okay, we're going to take that guideline, but we're going to get a little bit more strict, right? We don't want to do loans that are going to go down to 500. Well, there are some programs out there that'll allow for a 500 FICO score, but you got to make sure that the lender will accept that. Mobile homes, you have to understand what is the situation on the land that's underneath that mobile home. Is it a mobile home park? How long, if it's on a land lease, how long is the land lease got left on it? So I was dealing with a lady that wanted to buy a home, believe it or not, right there on Lido Island. So if you've ever gone into the Lido shipyard area, there's a whole bunch of mobile homes or manufactured homes on a land lease. And she wanted to finance it. It was great. I mean, ever hear of a property on Lido Island, a 3-bedroom property for $750,000? Well, it happens to be a land lease. It's only got 9 years left on the lease. So she wanted to finance the property. It was, I think, $4,000 or $5,000 was the cost of the land lease per month. And the property was cheap. But why? Because it had to be a cash deal. And you knew that you're out after, a very short period of time, right? So it was almost like rent. If home has a stick-built addition, you'll need an appraiser to state that the addition was done in a workmanlike manner and get an engineering cert to prove that the addition did not compromise. You need to find a lender. Again, looking at the overlays. Oops, I missed. Oops, let me go back to that screen so you can see that one as well. I got to kind of stand here and look at what I'm talking about and also the screen. Perry, holler at me if I miss this, if I'm not on the right slide. Got to have HUD tags. They're going to want to know when the property was put on there, when it was built. More often than not, you end up needing, and most, if you understand mobile homes, you understand that you need to have an engineering certification. It's just part of the process. Again, if you don't know that, or if the lender doesn't know that, that's when you get into issues. Condos. Let's talk a little bit about condos. So again, we have a lot of those out here in other parts of the country. They don't have as many. And as many of you know that that have come to my webinars and lunch and learns in the past, I collaborate with another gentleman on doing these. So you're going to see some things that we put in here that may not always apply to California because he's in Maryland. And, our down payment is basically the same size as his full purchase price. So you'll see some of that. Condos, townhomes, again, zero lot line. We need to know if you're working on, if you're dealing in a condo environment. I've seen a number of transactions fall out where we get to a maximum DTI, and we're budgeting for a house, a single family residence, and then we find out there's a condo, and you got to add $300 extra to the expenses on the debt to income ratio. So if that's what you're planning on shopping for is condos, because all we know is numbers, right? We're not part of that buyer consultation where you're talking about that we're going to go look at condos in Irvine, or we're going to look at houses in Laguna or whatever, right? So just share the information. Again, transparency. We're on the same team. That's the bottom line. We need to make sure that we need to do some homework and find out, is there any litigation on the condos? Some condos we can get a loan for based if there's litigation. Sometimes we have to go to non-warrantable. So we're going to have to look at that. We understand those things. Is the condo on the approved condo list? Again, we can go to what we call non-QM financing and get some of these things handled. But we understand some of the issues that fall into that. We're also going to look at the ownership. We're going to end up needing to know ownership. I would ask all the time when you're going and shopping, and as a listing agent, you'd want to make sure that you're doing this homework. If you list a property as well, you may want to get a condo cert and know that no single entity owns more than 10% of the properties. Let me just see if I can close this other thing. It's blocking my vision. No single entity owns more than 10% of the units in a project, including the developer. We need to make sure that at least 51% of the units are owner occupied. Fewer than 15% of the units cannot be delinquent on their association dues. These are all things that are going to show up on the condo cert when we ask for it and when we go through the process. no litigation in which the homeowners association is named commercial space accounts for 25% or less of the total building square footage. So those are all just a whole bunch. You've got all of those in your handout there for items to be watching out for. Again, just red flags. If you know about these things, or if you, here's the issue of what I say, because I have a team that I work with that handles a lot of my stuff for me. So why do I bring that up? Do I need to remember what that percentage is for single entity owning 10% of the properties? Or I just need to know that, hey, there can't be more than a certain number of people own it. As long as you know the issue, you don't need the specifics because you got our phone number, 800-306-1990, right? You don't need to know how many of the units have to be owner occupied. You just have to know that, you know, if they're all investors, there could be a problem. Call us and we'll find out what the exact numbers. We'll give you those exact numbers. Does that make sense? That's the whole issue of what I'm trying to get there. Is not that you need to be an expert in all these things. You just need to know the overview that, hey, these are red flags that we've got to watch out for. Conventional loans. Now we talk about conventional loans and some people will say, well, you know, that's an issue of conventional. I don't have to worry about it on the FHA or on the VA. And it's still important to know about for all of them. Every one of those loans have their own idiosyncrasies, but you want to make sure you're watching all of these things. No visible roof leaks, right? The appraiser and the home inspector are going to spot them. Appraisers are going to call them out if there's a roof leak. No visible moss on the roof, damage, missing shingles, the flashing out front. If he's got dry rot on there, address it because it's going to come up. And it's always going to be better to have that addressed before we send out the appraiser or before the reinspection. Just know that if the appraiser calls out dry rot, it's going to have to be dealt with. And we're going to have to, the transparency part is that when that happens, we need to let the buyer know there's going to be the appraiser has to come back a second time to make sure that they can sign off that that's been corrected. And every one of these things we've seen, no half-done construction or renovations. Started redoing a bathroom, a guest bathroom, and then they had to move, or the relocation, they didn't finish it. It's going to get called out by the appraiser that it's the health and safety issue. And there are obviously the health and safety issues, mold, if there's no stair railings, these are all things that are going to come about. So watch for them yourselves. Just be aware of them. Here's couple of the biggies that I see all the time as a problem. We send it out in a notice to the buyers and the agents. There's going to always be looking for CO2 detectors and smoke detectors. If I was a realtor going out in the street, I'd have one of each or two of each of them in my trunk. Because you don't want to get to an appraisal and find out there's no smoke detector and it gets called out on the report. And then it's going to cost $100, $150 for the appraiser to come back out and potentially, they're not just sitting there waiting for us to call them to say something's fixed. So if they come out and they say there's no smoke detector, you go out in the trunk of your car, grab a smoke detector, put it up. And, you know, I think they're $10 or $15. Yeah. I mean, I just had to, well, you know what smoke, I don't know how they manage this. Smoke detectors only go bad in the middle of the night. You ever notice that? I mean, I have a 10-year smoke detector that's supposed to last for 10 years. It just went out the other day at 2 a.m. Couldn't do it 2 p.m, but in any event, I would have each of those and let the buyers know and sellers know that they've got to be there. Yeah. Dry rot, we talked about. Holes in the vents are signs of rodents. And I'm sure that as an experienced agent, you come across all these different things. The brown ceiling, the brown circle in the ceilings tells us various things. There are special issues for, whoops. Oh, it's blocked up there. There it is. Okay, so let's talk next. We'll go into FHA and VA. So everything that I mentioned before is going to apply. That's the bottom line. People want to think that, no, it doesn't apply, that was just conventional. No. Then we add on more to it. FHA, if they see peeling paint, can't get an FHA loan, right? Because they want, it's going to have to be remedied. No unpainted or unstained siding, wood railings or trim on the exterior. If you have sheds or ADUs, going to have to all be taken care of. One that's it's a weird one. I don't know why they have this one in there, but they do. You can't have bushes or branches touching the house. It's just it's one of their rules. I think it has to do with rodents being able to get onto the roof or get into the house, but no touching. So if you see that, yeah, damage the roof. Well, Gilbert, I'm the first to admit, I don't even know how to use a screwdriver. So you're way ahead of me. But the bottom line is it's one of the rules. So let's just know it and deal with it. We don't have a lot of these, but some places do. Wood stoves, got to be certified or removed. And again, if it's in an addendum that it's going to be taken care of, we don't want to know about it. If we don't need it, don't tell us. That's the bottom line with addendums. If it's taken care of, now if it's not taken care of, you've got to sign addendum so you can hold the buyer to it. But if you're having a home inspection, if you call out that, hey, on page 5 that there's the fascia is bad on page 5 of the home inspection, the underwriter is going to ask for the entire inspection, and they're going to start looking at it and scrutinizing, is there anything else that sets a red flag to them? So our whole focus is we give the underwriters everything they need and try not to give them too much. Big issue, FHA 90-day flip rule. So let's talk about that a little bit so you understand there as well. So 0 to 90 days, that's the flip rule. If the last recorded deed is less than 90 days away from the sales contract, not going to get the loan done. How do we get around that? Well, you can write the contract and have the conversation that, well, we know we're going to have to redo the contract after that 90 days. There is a red flag in that as well. Don't have the deposit check dated before the contract date. If you have the contract a couple weeks before that, or the deposit dated a couple weeks before that contract date, red flag, underwriter is going to say, this is falling into the flip rule. So as a buyer, you're going to wait until the seller owns the home for at least 91 days. At that point, you can sign a purchase contract and pursue the FHA financing, again, with certain restrictions. Buying a flipped home between 91 and 180 days, that's going to require a second appraisal that the buyer cannot pay for. Somebody else has to pay for that second appraisal between 91 and 180 days. So just be aware of that as you go through that process. So again, if the last recorded deed has been 91, 180 days from the sales date, contract date, buyer must get a second appraisal. I just told you that. Sometimes I get ahead of the slides. Again, the buyer cannot pay for that second appraisal. Anybody but the buyer. You can have a listing agent, buyer's agent, lender, just not the buyer. So got an example here. Seller bought a home for $150,000, selling for $300,000. FHA buyer would need 2 appraisals, one at the expense of the seller, unless the seller has owned the property for at least 181 days. And again, if there's any questions, just put them in the chat and Josh will either answer them or holler at me. Investment property purchases. Cannot use gift funds for investment property purchase. Spouse funds that is not on a contract is gift funds. Seller concessions is a big issue right now. I just saw in a report from the National Association of Home Builders, 60% of their transactions, they're giving concessions on. 60%. So what does that mean? That means that what we've been talking about is the buy downs, 2-1 buy down, permanent buy down. Those that haven't seen it, Josh, put it in chat for me, please, if you would. rsrbuydown.com. rsrbuydown.com. So we've actually gone through 5 different ways that you can reduce your payments in that. And I walk you through every one of them in that program, rsrbuydown.com. So investment property, maximum seller concessions is 2%. They call that interested party concessions as well. We got to know where the money's coming from. Where's the dough? Where is the money coming from? So as a buyer's agent, one of the easiest ways to deal with that, ask the lender, have you confirmed the source of funds? Hey, Perry, can you do me a favor? Can you run into my office here and grab my water cup? Thanks. So ask your lender if they've confirmed the source of funds. It's just a real simple thing. Where are they coming from? Are they gift funds? Are they inheritance? Is it a gift of equity? If they have cash, can't use cash at closing, but we can coach people on how to put cash in the bank the right way so that it can be used. So it's just one of those issues right there. Perfect. Thank you, sir. I usually remember to bring that out here with me. Thank you. Diane. If it is a gift of funds, make sure the lender is coaching the buyer through exactly how to handle those funds. Make sure the earnest money deposit is deposited on time and correctly. Ensure buyers will not be out of town around the closing date. That's another big one. Get buyers that buy a house and they decide they're going to go to Cabo for a week, right at closing. We've dealt with all of them. So if it's domestic, it's easier. When they're out of the country, then you got to deal with an embassy or powers of attorney or things like that. So now let's talk about writing the offer. Need to understand what the limitations are. Oops. I just went too fast. VA offer, maximum seller paid closing costs. So here's, again, VA loans are great loans. They've gotten bad reputations, but it is the best loan on the market. Maximum seller paid closing costs. The seller can pay for anything they want in closing costs, as much as they want. They can't pay for too much in buy downs, but there's no limit on what they can pay in closing costs. And if you can find one that wants to do it, the seller can even pay off credit card debt or car debt or other debts to qualify. Again, the VA loan is only for owner-occupied properties. Sellers do not pay additional closing costs with a VA buyer. That's another one. The sellers think that, oh, it's going to cost me more money to do this. No, it's not going to cost more money for the VA loan. VA loan is also one of the reasons I love it so much. The only loan product on the market where you can challenge there's a very specific and clear-cut way of challenging the appraisal. So if the appraisal does not come in and you're dealing with a VA buyer, if the appraiser can't find value, by rule, they must call you, both agents, and the loan officer in advance before they write the report and tell us that it's not coming in and give us an opportunity to help. So first off, the report has to be done within 10 days of assignment. And then there can be what they call tidewater. So what is tidewater? So again, if the appraiser cannot find value, sorry, I missed some slides here. Tidewater, I think I'm catching up. So what is tidewater? Tidewater is required when a VA appraiser cannot find comparable sales that support the purchase price. They've got to call and tell the listing agent, the buyer's agent, and the loan officer, hey, we're not finding value. And we've got 48 hours as a team to get them the numbers to substantiate our case. Now, if they still don't agree with us, we can take it the next step and go to the VA directly and talk to the VA and say, hey, here's the appraiser isn't finding value. Here's our purchase contract. Here's our supporting evidence as to why we believe that the sales price is representative value. Maybe you've got there's extra offers or things like that. And the regional center can actually then override everybody and say, we agree, we're gonna deem this eligible. Now, when we talk about loan types, here's a biggie that has to be done the right way. And if you go to that rsrbuydown.com, I walk through this in real detail. But conventional loans, the seller, there's limitations as to what the seller can offer in a buy down, but it has to be done the right way. If it's not done the right way, then what ends up happening is you get to the 11th hour, and what happens is we've triggered high cost and predatory lending violations, which basically says, Mr. Loan Officer, you've done this wrong, and you're going to have to write a check for $30,000 or $40,000 to make this deal go through. What do you think the loan officer is going to say? Sayonara, right? They're not going to do it. So if it's done the right way, here's what the numbers are. If you've got a down payment that is, or if you've got a loan to value greater than 90%, you're going to have 3% in seller concessions. From 75.01 to 90, you get 6%. And if they're putting down more than 75%, more than 25%, you can actually go to 9% in concessions. Now, remember, you say, okay, well, who's going to do 9%? Well, what if we go and we have a property that's a $600,000 property that's listed at $600,000, and we say we're going to put down 25%, and we say that we want to get $75,000 in, and I didn't do the math on it, so whatever 9% is, right? So we say we're going to do $655,000. So Gilbert, you're the listing agent. I say to you, would you take your property's listed at 600? Will you take 655,000 and use that extra 55,000 to help my buyer with reducing his interest rate permanently so he qualifies for the house? There's no expense to you, right? I'm asking you to raise it. Red flag. What's the red flag? Appraisal. So if you're putting down that much money, we have an appraisal gap program that'll solve that problem. And we describe that in there, so we don't have to worry about appraisal problems. Now, and I'll explain that in a slide coming up here a little bit more about it, because there are catches to that as well. Investment properties, doesn't matter what the loan to value is, limited to 2% is the concession. Oh, Harry, you're keeping behind me, man. You're not telling me to move forward. How did we get to? That's number 3, right? Okay, writing an FHA offer. That's where we're at right now. So FHA offers, all the same. Seller concession is 6% of the sales price. Again, those are owner occupied only. Be careful of the 90-day rule. And again, make use of your property profiles and your title relationships to make sure that you're knowing where you're at on these different issues. So writing the offer, that's next up. Appraisal gap guarantee. Let's talk about that right now. And again, we'd walk through this on a lot of our different, on the that presentation that I talked to you about. So this is an option that isn't exercised unless the appraisal comes in low. You have to write this as an addendum. Again, we're not going to we're not going to tell the lender about it, or not going to send it to the lender. You can tell us about it because we're going to help you with it. But we only want it if we need it. Get it signed, give a copy to the buyer in your office, hang on to it. If the appraisal comes in low, if it doesn't, the addendum was irrelevant, just toss it. Does that make sense? So how does the appraisal gap work? We're going to use this on small numbers. Got a purchase price of $300,000, down payment of $60,000, loan amount is $240,000, 80% loan to value. Appraisal came in though at $252,000. Down payment is still going to be at 60%, but what we're going to do is we're going to modify the loan to value internally from 80% to 95%. doesn't make any difference to the buyer. They're still coming in with the exact same down payment. Now, what is it going to change? Frequently, we see that actually the interest rate drops a little bit on that, 15, 20, 25 basis points. We can then go out and look into the possibility of single premium mortgage insurance, or there could be mortgage insurance on the loan itself where you'd pay a regular mortgage insurance premium, right? So that's kind of the gist of it. Again, I don't want you guys to think you have to know everything there is to know about appraisal gaps, but I'll tell you that the simple thing is, if you look on the very last page of your handout, everything you need to know on the appraisal gap is on the last page of your handouts. It's our phone number, right? Real simple. When can we not use an appraisal gap? When the buyer's putting down the minimum down payment, right? Because what I've done there, if you've noticed on that last slide, we adjusted the loan to value because we have the room to do it. So on the FHA, if they're doing a net minimum down payment of 3.5%, doesn't work. On the conventional, if they're doing a minimum down payment of 3 or 5%, doesn't work. VA loan, if they're putting nothing down, doesn't work. And USDA, if they're putting nothing down, doesn't work. Right? So just be aware of those areas where it doesn't work. We don't want you to get into a problem with it. Proactively avoid problems in underwriting. One of the biggies, especially that I see a lot of times, and this happens more in the higher priced properties, they put a schedule of personal property that's included with the transaction. Don't do that. Or if you're going to do it, make sure that the contract says that furniture is being left and is given no value. If it's got a value, the appraiser has to call it out and they reduce the numbers, and it does have an effect on the entire transaction. So just be careful of that one. If zero value is not specified, again, the appraiser must include it in his or her valuation of the property. If the lender is lending on that value, the value needs to be in the property itself, not items that the owner can pick up and walk away with. Right? What is the appraisal for? The reason that we have an appraisal is to tell the lender that here's the value of his collateral. This is what he's lending on. Here's some occupancy pitfalls. Be careful of this one. If it's an owner-occupied property, the buyer must be occupying it within 60 days. So if you know that you're dealing with a lease back and it's a 90-day lease back, we've got a problem, right? So we don't want to get into that. So you never want to write that for more than 59 days. If the home is currently a rental, find out when the tenants were given notice, or write a close date long enough to follow state tenant laws regarding how much notice is required for eviction to accommodate the owner occupancy within 60 days. Because now, how am I as a lender going to find out that it's a rental? The appraiser. The appraiser is going to tell us, right? Addendums is next up. Tips and tricks for any loan type. Get the addendums that you want the lender to see, seller credits, price, closing, etc., to the lender as soon as possible. Right? Our case, we underwrite in 24 hours. But if you don't underwrite in 24 hours, you can end up having an addendum that we find out about later. The whole file has to go back to underwriting again. Always create a separate addendum if you're exchanging money, the seller credit or price reduction. In lieu of repairs, do not mention the repairs on the addendum. All right, so you got a seller credit for repairs. Boom, that's it. Not what it is. Not that there's a roof leak, because then they're going to want to have a receipt and the appraiser go back out, and you're just throwing up a red flag. Never refer to the inspection report in your addendums by line items or pages. Otherwise, you're going to need to send the entire inspection report to underwriting. And again, it can open up a can of worms. Same reasoning there. That's why we ask for all pages of every bank statement, because we don't necessarily know what surprises we're going to find. So that's why we ask for every page. If the seller's paying a repair invoice out of escrow, The lender doesn't need to know that. It's a seller expense, not on the buyer's CD. Don't mention it as an addendum, right? So we're not looking to, absolutely, we'll never, ever ask somebody to break laws, right? But if the seller is going to fix something and it's not part of the transaction, we don't want to put a red flag on it. If the seller is paying an invoice at closing from proceeds, the sale then must be on the seller's CD, must provide an invoice for completed work. Only the lender will review it, must make sure there's no inducement to sell. So again, we're not looking to do things that are going to violate any kind of laws. And can't pay an escrow for work that's going to be done in the future. Again, that's a red flag. It says something's wrong with the property, something wrong with the collateral. So be careful of that. New construction addendums, please make sure you send all price change and option changes to us as soon as possible. Don't assume the builder or the buyer is sending addendums to the lender, because they're probably not, right? So you want to make sure that again, we're not going to be upset if we get the document twice. Seller closing costs cannot pay the down payment, right? So FHA has a requirement for a 3.5% down payment. That has to come from the approved sources. The seller can't pay that. So again, there's your numbers for it. They can't contribute toward that 3.5%. Six on FHA, 6%. Yeah. Waiting for the clear to close. Keep tabs on your buyer. Again, don't once you've got the contract, don't leave your commission to chance. Right? Call your buyers on a regular basis. Keep in touch with them throughout the process. There's certain times that you have to, but be strategic about when you're going to. And here's some of the do's and the don'ts. Hopefully, your buyer's not quitting their job during the process. We've had that happen. They got a better job offer, so they left their job A and went to job B because they got a better offer. Problem. I told you about financing a car right before the close of escrow. We're going to find out. So don't, you coach them, we coach them, and hopefully it gets through. Wire instructions. This is a biggie. Tell your buyers, do not accept wire instructions exclusively by email, text, carrier pigeon, or whatever. If you get wiring instructions from escrow via an email, pick up the phone and call the escrow agent and confirm. Don't leave it to just that email. We talked about it one day in Caravan, that there was somebody that we're talking about this and how this fraud is going on, and how somebody had sent a transaction getting ready to close, and the buyers got an email from the agent, or who they thought was the agent, saying that the wiring instructions have changed. Please wire your $90,000 to Georgia. And turns out it was Russia, Georgia, not Atlanta, Georgia. And somebody had hacked the agents while she was actually at a car meeting. They had hacked her emails. They started writing things just like her. They sent it on through her email saying, here's the new updated wiring instructions. And we never heard, I didn't hear the whole story. I know that they were able to stop it. Usually they can't. But we're talking about this at Caravan one day. And it turns out that the bank that was involved, one of their representatives was at Caravan with us. It was Connecta Credit Union. And he said the only reason they were able to stop it or save them was because the instructions came in at 3:30 in the afternoon. If it had come in before their cutoff time, they would have been out $90,000, no way to recover it. So, So make sure that your buyers know, pick up the phone and call. So we have a concierge program. I suggest everybody have something along those lines, but the concierge program, one phone call will take care of all the utilities, the gas, electric, water, cable, and give them a free camera for their front door. But if you're not using that, make sure the buyers have all this information at closing. Internet, yeah, we got to find that one as well. Home warranty, make sure they have the information if there's part of a home warranty involved. Top 10 don'ts during the transaction. Again, don't quit your job. Don't apply for new credit. We'll find out. Again, that pre-closing credit report is done within 72 hours of closing. So it'll be documentation, that extra documentation has to be done. Don't pay off collections unless you're told to do so. Don't close credit card accounts. That can have an effect on someone's credit scores. Don't change jobs. Don't go shopping for the home. You know, if you don't go buy some new furniture before we close, right? We're going to see those things. Don't make undocumented deposits. Again, no cash going in unless we talk about it and know how to do it strategically. Don't transfer credit card balances. Don't take cash advances on the credit cards. Can't use unsecured debt to buy a house. Don't spend money that you need before you purchase the home. Right? Make sure you have enough money for your down payment. And as always, I share, I'm not a public speaker, not a paid speaker. We do this to try and earn your loan business. So if we can help you with any home loans, give us a chance, maybe on your next 2 or 3 transactions. Love to show you what our team can do. Any questions? Comments? Darts? Don't throw the darts at me. Yeah. Yeah, exactly. You have any questions that I've missed through chat, Josh?
None.
Cool. Okay. So if you've got any questions or anything, give us a holler. Other than that, that's a wrap. Thanks, guys.